Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, August 1st, 5:52 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. Check over here at the trend gauge. Four green arrows reflecting the fact that market leaders are acting well, and all five of the major indexes are trading above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. So what happened today? Well, it's really day three of consolidation after the big shakeout last Thursday. We had recovered some of that on some of that drop on Friday, a little bit more yesterday, and mild pullback today. Tight range again, just like yesterday. However, yields broke out. 30-year rate broke out to a new high. 10-year is approaching a new high, and that's definitely something we need to keep an eye on. And then additionally, after hours, Fitch came out and downgraded the U.S. long-term credit outlook. uh, Futures don't seem to like that much. We're down just about less than a half of a percent, but we'll see how that plays out tomorrow. Obviously, these credit agencies have zero credibility after what they pulled off with the financial crisis, rating those mortgage bonds AAA when they were in fact a bunch of garbage. Anyway, here are the numbers on the day. RG8, this is our eight growth ETF composite, down 0.9%. S&P opened down 0.3, closed right about there, down 0.27. Nasdaq 100 down 0.23. Dow finished positive by 0.2. Mid caps down 0.25%. Russell 2000 small caps down 0.45. Well off the lows though, down over 1% at one point. Global 60/40 down 0.6%. Both stocks and bonds taken a hit on a global basis. In-house GROTECTION down 0.56%. We were hit by Uber's earnings report. It initially started out looking pretty good, above 52, but shortly after the open started selling off, closed near the lows of the day. Well, a little bit off the lows of the day, but still disappointing, considering that they upped guidance, but were a little bit short on revenue for this quarter. But it is what it is for now. It's still holding the 21-day moving average. We'll take a look at that when we get to the charts. And let's go ahead and get to the charts. Here is the S&P 500. Let me turn off the stochastics, zoom this in a little bit. And you can see the tight range. This looks a little bit clearer on a 30-minute chart. So you can see there's the failed breakout negative reversal last Thursday. That's what led me to have a short-term cautionary outlook. The lows of that day are holding 45.30, very critical area. We do not want to break below 45.30. On the other hand, we can't seem to get back above or stay above 45.80-ish, which was this prior breakout area. On July 19th, it was resistance. On July 25th, it was resistance. That's where we peaked on the 26th. We gapped above that on the 27th and failed, and have not been able to stay back above that level the last 3 days during this tight consolidation, tight 3-day range that we've been trading in after the gap up on Friday that recovered quite a bit of that sell off Thursday afternoon. That sell off was caused by some angst over Japanese fiscal policy, interest rate policy. We recovered most of it, but like I said, trading 3 days in a very tight range now, 45.30, very key area that we want to hold. And that area is even above the 21-day moving average, which is down at 45.12 and is gaining about uh, 5 to 8 points per day. Let's go to the NASDAQ 100. Kind of just been even from a relative strength standpoint with the S&P after getting ridiculously extended about 6 weeks ago. Uh, you can see we'll go to the 30-minute chart here for comparison. Very similar. The difference is that we did not make a higher high. We did not break out on the 27th. The high was reached on July 19th for the Nasdaq 100, but in a similar manner, trading in a tight range over the last 3 days after getting quite a bit back of that move down. And you can also tell from the 30-minute chart, there's a pretty clear support area here at 375 that we need to hold. Back to the daily charts, back to the Dow Jones Industrial Average, the only one of the big indexes that closed positive today, and that's a higher high too for the Dow. So nice stuff there. And it's been showing relative strength over the last 3 weeks also, which is kind of in sync with relative weakness on the Nasdaq. Usually one or the other tends to lead. In this case, it's really been the Dow as those big tech leaders taking a bit of a break. Let's see what happens after Apple and Amazon, the final two earnings reports of the big seven, come out after the close on Thursday. Let's go to mid caps now, which have been trying to break out above this 500 level and have been unable to. Really a 3-day consolidation inside that big range bar on Thursday. Also, small caps likewise unable to break out. But look how I did mention well off the lows. They closed at the top of the range after bouncing off the ADMA, made a new high yesterday. This actually down, but another closing high from the recovery. Well, not a closing high, the second highest close after this cup and handle breakout. Let's flip to the VIX very quickly. VIX has been was up yesterday despite the market being up. It was up again today with the market being down. The 21-day EMA is flattening out, and we've been in a very tight range here. It's like the VIX is coiling for something. We got a close eye on that. Flat 21 closed right on it. We certainly don't want to see a spike above this 15 level, which was the high last Thursday when we had that sell-off. That would pretty much coincide with a retest of the recent lows on the indexes. Go to the dollar. UUP, and this is a problem too. Rates up, dollar up. Both of these are bad for stocks. The dollar up nearly 0.5% today, breaking above the 50-day moving average, above the 200-day moving average, and it's above the 21-day moving average. And look at that big run that the dollar's been on for about the last 2 weeks after a failed breakdown below the prior lows that were set in March, April, and May. Let's go to precious metals. If the dollar was up, that's probably not going to be good for, I'd say if the dollar is up, it's probably not going to be good for precious metals, and it was not today. Lower lows versus last Thursday's action, down 1% on gold. On GDX, down gold stocks, down 3.76%, sitting on the 200-day moving average now. So that 2-day pop off of the sell-off last Thursday completely gone away in the precious metals. Let's go to silver, SLV, down 1.76% today. Let's flip to bonds. BND, the broad bond index, down a lot, down 0.9%. And the broad index is breaking to new lows. That means the broad interest rate is approaching new highs. And again, that's not good, especially for growth stocks. TLT making lower lows. That means TYX, the 30-year long bond, making higher highs. And there you see it, this 40 level before. Remember this abandoned baby back here in late February, and then the failed breakout again 3 weeks ago? Well, we just made a higher high. And I know enough from getting smacked by interest rates and what they do to growth stocks to have at least one eye peeled for the 2x4 that often lurks behind the corner. So that's TYX. How about TNX? This is the 10-year. Not new highs. It might be a closing high. 40.51, 40.50. This is a new closing high, except for back here 40.91 again in February. That was the false breakout higher. We were thinking this was another false breakout, but we're challenging it again. pay attention to it. I know I will be. And let's see what Bitcoin did today. Bitcoin gapped lower, but finished at the high of the range, but it did make a lower low. This looks kind of like the distribution got paid. I need to check on that. The regular Bitcoin chart does not look as bad. Let's look at GBTC. This is not exactly spot Bitcoin, but and this was a bad bar very clearly, but doesn't look as bad there. This still trades at a um, discount. In fact, you know what? Let's bring in Toss and show a Bitcoin chart, and we can see where it's trading here. This is a 3-month daily chart of Bitcoin, and you can see there trading at 29,350. So BitO looks worse than that. So what is it doing? It's holding the -1 ATR. That's the blue line. And it's trading below the 21 EMA, unable to get back above it for the last few sessions. This is a 4 ATR chart. The outside light blue lines is 4 ATR from the 21-day moving average. That's the middle red bar. The yellow bar is the 3 ATR plus or minus. Green is plus or minus 2. Blue is plus or minus 1. So maybe I'll just start showing that Bitcoin chart on Toss instead of the BITO, which does not necessarily seem to be in sync with what's going on in the Bitcoin world. Okay, that is the inter-asset correlation. Let's go to the tail of the tape. Obviously, I've got some things highlighted in red, and if you know something's highlighted in red, it's not usually good, and this is the case also here. So what's not good? TNX, TYX testing highs. The Fitch downgrade, the U.S. long-term credit rating. Don't know what the impact's going to actually be, but it's generally not good to have your credit rating downgraded. Like I said, Fitch is a joke, but then again, so is our U.S. government with the spending that we have done. We have no chance of paying it back unless the dollar is massively devalued. And right now, there's no replacement for the dollar. So the VIX up 2.2%, already showed that chart. It's at the 21 EMA. Fear and greed at 77. We're still above the 21 EMA on the S&P and the Nasdaq. That's positive, but testing these support areas, support resistance areas, certainly on the Nasdaq 100. You see 382.86. We closed at 383. 68. Actually, we closed at 382.79. This was the prior close. The red arrow means we were down on the day. And despite the tight range, we certainly want to be aware of these levels. Like I said, 45.30, that's the top of this 4,500 to 45.35 range. Let's see what else. So what was up on the day? The dollar, ITB, which is housing and the housing complex, despite rising interest rates. XLI and K, industrials and tech, were up. Cyber names were up also on the downside. Gold, and silver stocks, oils, banks. XLY because Tesla and Amazon were down. That's discretionary, and XLU utilities. Here are some names of interest. Changes we did in-house was we trimmed Uber breaking the 80 EMA, but bouncing at the 21 on the negative earnings reaction. So we booked a 26% gain on that piece. We've got near 30% gain on the remaining piece that we have there. And we bought Mara on a bounce off of the 8 EMA. Let's take a look at those two charts. We will momentarily. Bottom line on the day, mild pullback, tight range all day again, yields higher. Got to keep an eye on that. And also the credit downgrade, got to keep an eye on that. So let's go to the focus list first, the two charts that we traded today from our in-house holdings, Uber. So let's go to the 5-minute on this, and you can see we initially were up as high as 52 pre-market, and then the closer we got, we went negative, ended up with a down open, a little bit of a bounce off the lows of the day. That lows of the day correspond with the 21-day moving average. Our last piece will be protected by that 21. We don't want to see that break. The numbers, sales up 14%, not spectacular. Earnings up 114%, and supposed to even get better next year. First earnings, positive earnings on a GAAP basis, and I think $1 billion in free cash flow. Did that sound right? I think it was. I think I read that. Uh, Big sales, $9.2 billion in sales for the quarter. But it's the reaction that matters, not the numbers. So there's Uber. On the other hand, Mara, Bitcoin miner, positive, making money this quarter, bounce off the 8 EMA after testing it quite a while. This was the lowest risk entry I could find today. Should hold the 21, the bottom of today's range, which corresponds with the bottom of two daily ranges going back last week also. So a small starter in Mara. Uh, our volatility adjusted beta at a 1.57. The S&P 500 is a 1.0. That's the baseline. A couple charts to look at that were impacted by earnings. ANET, ugly move down into earnings, nice gap up and breakout on earnings, a little bit off the low, closed higher than about in the top third though, but up 19.7% on a beat and raise, not beat and range. It broke out of the range. So nice job, ANET there. Another nice job by Caterpillar, up 8.85% on 300% average volume. That is a fantastic move by Caterpillar. Closing at the highs of the day on significant volume. Good stuff there. Caterpillar, let's go to SoFi, which had a nice move yesterday, gave back some of it today, closed near the bottom of the gap range, down 9.6% after being up yesterday 20%. Gain one day does not guarantee a gain the next day, obviously. SYM gave back a bit of its massive move on earnings yesterday, a 50% up move, gave back 9.3% today, still holding the breakout level, the pivot. Let's see, AMD after hours today, up 4%. Decent reaction to that earnings report. NVIDIA is up, well, it was up. Now NVIDIA is down $3 on that. And let's also look at ELF, which blew out the quarter. ELF up 16%, all-time highs for ELF. I don't think I've ever misplayed a stock as badly as I have on ELF here. And now TBT. This is something we're looking at possibly getting into, and this is being bid up after hours. Also, as interest rates are rising, interest rates rise when your credit, that's how junk bonds work. Your credit is worse, the rates are higher that people demand. So pay attention to what's going on here. And that is going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, reach out to dan@revereasset.com. My partner, Dan Stewart. He will assess your situation and give you a great overview of what we have to offer versus the traditional advisor. For one thing, they're not doing videos every night telling you what's going on in the market and in your portfolio. And with that, I'm going to wrap up the video for Tuesday, August 1st. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.